I welcome you all in the another episode of accountancy. Today we are going to see how the comparative statement of profit and loss account has to be prepared. Previous class we studied about the comparative balance sheet. Today we are going to study how the comparative statement of P&L account has to be done. So what happened? In both the statement, we used to compare. We used to compare our current year information with the previous year information in order to know that whether we are better than previous year or not. For that reason only comparison is required. Previous class we did comparison of balance sheet, but this class we are going to compare the profit and loss account. You're getting a point? It's a statement of P&L. And statement of P&L is prepared in order to know that whether we are in profit or loss. Every businessman is eager to know the position of his business, whether he is in profit or loss. After preparing the statement, if we get the positive figure, it means profit. And if we get the negative answer, it means loss. You getting my point? So, it has to be framed in a format. And the format, it is similar to comparative balance sheet. Okay? Come to the specimen format. It has a particular column, note number, current year information, previous year information, current year information, absolute change and percentage change. So first of all, we have to record the particulars items. The first item, that is revenue from operation. What is revenue from operation? Income generated through sales, that is an revenue from operation. Here we are going to record the net sales. Net sales means sales minus sales return. That amount has to be recorded. And on that amount, we have to add the other expenses according to the practical. If any other income is there, that has to be recorded under this head. And after recording other income, what we have to do? We have to add both the incomes. And whatever the amount we get, that will be termed as total income. Literally called as total revenue. Total revenue. That has to be recorded over here. How the total revenue is generated? Roman letter 1 plus Roman letter 2, you get the total revenue, and that has to be recorded over here, total. And then after, what we have to do? We have to record all expenses. Here in board, only one expense is mentioned. Apart from this, if other expenses are there, that has to be recorded one by one. I'm going to give some examples under expense category. The first is cost of material consumed has to be recorded. Then purchase of stock in trade, that is net purchase, has to be recorded. Then change in inventories of finished goods, work in progress and stock in trade has to be recorded. This is the opening minus closing. Whatever the amount we get, that has to be recorded. Similarly, employees' benefit expenses, that is wages, salaries, bonus, has to be recorded. Finance cost, such as processing fee, discount or loss on issue of debentures has to be recorded. And depreciation has to be recorded. The reduced value of an tangible asset has to be recorded, that is depreciation. Similarly, amortization has to be recorded. The decreased value of intangible asset has to be recorded. And other expenses. Apart from this, If any other expense is there, that has to be recorded. That has to be recorded. Clear? After recording all the expenses, what we have to do? We have to add the expense. And after adding all the expenses, we have to subtract it from the total revenue. When it is subtracted, if you get the positive figure, that will be termed as profit. Profit before tax, because tax is not deducted. And if in practical tax is given, that has to be subtracted from the profit before tax, and whatever the left out amount, that has to be termed as profit after tax. So in this way, profit or loss of a company can be ascertained through this statement. And how the comparison can be done? Comparison has to be done like this. First, we have to record all the previous year information, because we are going to compare our current year data with the previous year. So we have to record all the previous year information, then current year information in this column. Clear? Then we have to find out the absolute change. Absolute change, what we did in comparative balance sheet, same process has to be followed here also. Comparative absolute change. How the absolute change takes place? B minus A. Current minus previous year. Current minus previous year. You get the absolute change. And then percentage change has to be recorded. Percentage change means absolute change into 100 divided by previous year. Absolute change into 100 divided by previous year. It means 5 lakhs into 100 divided by 10 lakhs. You get the absolute change in percentage. You can percentage change. And like this, you have to record all the percentage. And by seeing this percentage change, we can predict. We can easily predict. We can easily analyze our business. We can easily compare our business. And we know that our business is in better position or not. Comparison is required in order to ascertain ourselves, to check that whether we are better than previous year or not in all the segments. Okay? And according to that, we can frame a remedial plan or alternate plan to cope up the situation. Hope you understood this topic. See you in next session.